Hey guys, what's up? Slam and Amon here. Just wanted to talk to you guys a little bit about Fibonacci retracements. It's one of my indicators that I use a lot, especially with crypto, and it can be a very useful tool. So Fibonacci is just based off of mathematics. I learned a little bit about it in college through calculus, and it's based off the Fibonacci numbers, a sequence of numbers, and how it applies. It applies in many different ways, even in nature, and specifically with trading. It helps you to identify support and resistance levels that are likely to happen. Some of the retracement levels and the Fibonacci numbers are 23.6%, 38.2%, and 61.8%, and also 78.6%. There's also 50%, but that's not technically a number in the Fibonacci sequence. But anyways, here we have a Bitcoin, a daily chart using the Bitcoin index for historical price. So let's go ahead and draw a retracement from the top of the market cycle in 2011. That's peaked at $32 down to the bottom of that cycle. So you see here's those numbers I was talking about, 23.6, 38.2. Let me zoom in a little bit. 38.2%, 61.8%, 78.6%. So just to show you some ideas of how these work, you see there's Confluence right here, 38.2%. It after Bitcoin bottomed out in 2012, it hit this level and got some resistance on the upside right here, and it continued to be resistance until the halving in 2012. Yeah, so after the halving, Bitcoin shot up and went all the way past the 4.236 growth area. But as you can see, even here on the back end of that, it still showed Confluence as there's resistance right here on the 4.236. And over here it was resistance also, and then on the downside there was 2.618, that was resistance. Let me draw a fib extension here. Where's fib? Trend-based fib extension. So I'll go from the bottom of the 2011 bear market to the top right here and to the bottom right there, which was just another way you can kind of illustrate how Fibonacci numbers can be used to help project growth. So you can see here there's even more Confluence for the cycle top in 2013 when Mt Gox got hacked or became an insolvent. See right here the 3.618. There's Confluence here near the top. It almost at Bitcoin, I guess technically it did touch the 4.236 level. So yeah, it topped right there. Went into a bear market. Alright, so let's do another one. I'm gonna grab the fib retracement tool. Try from the top of this market cycle. Looks like it was about 1100. Doesn't need to be perfect. This is not an exact science. Technical analysis is more like an art form. So let's zoom in here a little bit to give you guys a closer look. As Bitcoin hit the bottom of its cycle in 2015, dipped all the way down to $160. Like an 80 something plus retracement from the top. See right here, there's resistance right here. I guess 50% is kind of not a Fibonacci number, but it's still used by fib traders. Here's a fib number, 61.8%. See right here, there's resistance right here. It was climbing, and then it broke through, and then on the back end of that retracement, it hit support right here. And then as the bull market continued to accelerate, here's a 1.618% retracement. It bounced off of this retracement back into the 1.618 retracement level. Here's the top of this Fibonacci 4.236. It topped up here, it kind of bounced around here, and then continued on until it peaks. And so yeah, Bitcoin literally grows off the charts. The growth that Bitcoin does is absolutely crazy. Okay, I just wanted to take this last bit of time here to show you a Fibonacci retracement that I used to buy in this market cycle. I did a pretty big dip buy. So let's take the bottom of the December 2018 bear market and go to the top of this wave right here. It was the Facebook Libra pump. So we have here the top, and I wanted to also mention the golden ratio, which is very popular amongst trading. So yeah, it's called the golden ratio is a 61.8% level. You see off of this top, it retraced right exactly down to there, and it was bouncing off of that. So this would have been a good dip buying opportunity, and rebound. And then the coronavirus happened here, and then there was that liquidity crunch where nearly everything sold off. So you can see here on the golden ratio was hit with resistance here on the way back up as it bounced. Then it cleared it, but what's really popular amongst crypto traders and investors is the 78.6% level. And when it hit this level, this is where I was eyeing to buy. I didn't catch the exact bottom at 3,000, but I was buying in the $4,000 to $5,000 range and continuing to accumulate throughout the rest of the bull market till now, which we're still in a bull market. So just wanted to show you the Fib retracement in recent price action. So here's the top of January 2021 at about, what is that? About 40,000. It went down about 28,000. You see here the inverse of the gold ratio, the 1.618% level. I broke out of here to the upside, but got rejected up here at 58,000. Went back below it, hit it as resistance, bounced off these lows over here, and hit it with more resistance. So now the price is kind of sitting here. So any indicator for technical analysis is just to help you get a better idea. It's not an exact science, but Fibonacci actually is. Keep that in mind. Use it with other indicators and fundamental analysis, and it'll help you get a better idea of what's on the horizon, especially with an asset class like Bitcoin that's in price discovery. So yeah, let me know if you have any comments or questions below. Thanks for watching, and stay tuned for more.